Hey everyone, it is Evan here from the Trade Risk on Tuesday, April 21st, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump into our market technicals dashboard here. You can see a sea of red, something we haven't seen in some time now, and a firmly red 2 to 3.5%. NASDAQ 100 leading the way to the downside today, putting the 5-day change numbers back into firmly negative territory now. We started to lose some of these moving averages that we reclaimed late last week. So the market now in kind of pullback mode here. And if we scroll down to sector performance, you can see more of a tilt now to the downside. Biotech still in positive territory, trying to hold those breakout levels, but everything else down here going negative. Semiconductors, materials, and financials now the underperformers, and that's a painful group to have leading to the downside, because those are where lots of the juice, lots of the beta risk assets, so to speak, live. Now if we look at major markets here, you can see volatility getting a pop, up 20%, natural gas also getting some rotation, and TLT making its way to the top three, up 4.5% over the 5 sessions. On the downside, USO, I mean, this is front and center story. This is a total a total nightmare here, particularly for the ETF. We'll talk about that a little bit. Down 40% over the past 5 days, followed by silver and emerging markets. So let's jump into the charts here, and the TC2000 has been having some troubles here today. It's been outed. There's been a lot of outage here. I think a West Coast specifically. I've been keeping up to date with some of the problems over the course of today. So hopefully we can get through some charts. It's been some slow loading time inactivity altogether, but let's see if we can get through it here. This is the S&P 500 cash settled market weekly time frame. So each bar represents 1 week worth of trading. Certainly it's only Tuesday here, but we can see we're down almost 4.5% on the week. Notice we are back towards last week's lows now. So we have basically given up all of last week's gains and then some. And I think the way we close out this week is certainly going to be important. But remember, we've enjoyed a nice rally off of the lows. We've enjoyed about a 30% move off of the lows. So a little bit of a pullback here, it doesn't necessarily even have to turn into something big, bad, and ugly. It doesn't have to be the next big second leg down. It certainly could be, but I think at least getting some reset here, maybe shaking, kind of shaking the floor a little bit, getting people off sides, sucking in some shorts, shaking out those weak longs. I think all of that at least makes sense right now. And if we were to go to our other view that we've been looking at, this has been sort of our roadmap here that we've been keying on to, and you can see we almost completed this kind of exact measured move here. You could argue that we just got into the lower end, but we basically failed right before getting into the gap in here and really getting into that 61.8% retracement sweet spot. But the S&P 500 does appear to be rolling over now. If we were to draw even some of the shorter term trend lines, you can see we started to break, and of course now we're starting to take out prior day's lows, and that is always a good indication of looking for that sort of rollover, and when things are going to start to move to the other side. So with the S&P 500 now kind of breaking lower here, I think we want to be measuring sort of the character of this pullback. I think this is going to be very important. Do we just kind of orderly sell off for 3, 4, 5 days in a row and kind of check back to these lower levels, or do we see a massive resurgence in the VIX? Do we see ranges expand? Do we see volume accelerate and pick up again, and perhaps a influx of more negative headlines? That would be the more ugly, the bearish scenario right now, is if we come slamming back and rejecting and losing all of this progress in a very violent and quick fashion. So I think right now the most important thing to be paying attention to is just what this pullback looks like. Again, with the 30% kind of completing this measured move off of the lows, I think a pullback here makes a lot of sense, and it can even be healthy, and we can keep the lows and perhaps even this higher low and higher high pattern intact. Frankly, I think if we were to come back down, even down to this 26.35 here, and retest this, what I would consider the higher high, the breakout back from the 6th of April, I would actually consider this quite healthy here, and this would still bring us down another 4% or so based on today's close. If we were to come back down to 26.35 and hold that area, I think that would be pretty constructive here for the bull case, and would do a nice job at sort of resetting some of those technical overbought conditions. Now, again, the character of a pullback into this zone is going to be important to watch, because if we do just come slamming down here, let's say we just see a big expansion lower tomorrow into this zone and even a close below it, and especially on increased volume, again, that's not the ideal scenario for the bull case, right? We want to have an orderly pullback. We want to see buyers step in, perhaps some rotation amongst sectors, and breadth not completely fall apart with a ton of new 52-week lows, for instance. So those are sort of the breadcrumbs, the clues I'd be watching as we close here on Tuesday. I would be keeping an eye on 26.35 or so. That'd be the next relevant level I would be paying attention to at the bottom end of this range. And I think at best right now we're sort of range bound here. Do still have, again, that higher high and higher low pattern intact. We'll see how this week develops, but for now, getting a little bit of a reset here, and let's continue to watch how earnings season unfolds. We got companies reporting right now. I think Netflix, see if we can get to it after the bell here. So Netflix is reporting. Things look higher right now. Of course, these earnings are probably, fresh as of a few minutes ago. So we'll take this with a grain of salt. We'll see if the market can actually hold in there. That certainly will start to impact markets broadly too, as more influential companies start reporting those earnings. So S&P 500 in the midst of a little bit of a pullback right now. If we were to look at the Russell 2000, switch over to this view here, you can see they are still holding on to last week's lows on Thursday. We're still holding above 117 or so. So again, I think this is an important zone to just pay attention to. We still have a series of higher highs in place right now. This has been the underperforming sector. This has led us on the way down kind of first and earliest. So we'll see if that happens here again. For now, Russell pulling back down to recent lows, holding the important structural levels. We'll see if that continues into the end of the week. Last but not least, NASDAQ 100 here. This was the biggest hit today, and this has been the strongest of the bunch here. So we're seeing technology cool off right now, and you can see a little bit of elevated volume. So this is the highest volume session we've seen in the past, going all the way back to basically the end of March. So this is what we want to keep an eye on here. If we continue to see sell-offs accelerating, big ranges, heavier volume, that might not be, that's not going to be in the bull's best interest. You could argue, you could draw the trend lines up here and look at where, you'd want to see perhaps maybe a retest of this channel. So maybe, kind of a sweet spot here for the NASDAQ 100 to come back down into this 195 zone, kind of test the trend line, test this horizontal breakout level. That'd be a good kind of, sweet spot for the bulls to hold on to and reset a little bit of the froth that we've seen. You can also see that the NASDAQ basically filled this gap here back from the 14th. So all in all, getting that pullback in motion here, sellers, the shorts finally have some ammunition at their back though, because we are starting to break below, some prior day lows. So if you're on the short side now, I think you've got some of the clues and context and market confirmation now, if you're real short-term tactical, to be jumping on the short side. And then of course we'll see how the market reacts down to these levels, and we'll see if we can hold on to the longer term, intermediate term bounce and structure that has been in place now for the past 4 weeks. So with that said, let's jump into some other major markets here. We'll look at TLT on the week right now is continuing its march higher. It's up 2%, getting ready and trying to close here at new all-time highs. Would be a nice, again, strong sign here for TLT. We talked about the fact that TLT has not been giving up anything right alongside with equities. So we've basically had a bond market in rally mode. We've had equities in bounce mode and rally mode. So we're starting to maybe see that TLT was maybe telling the truth here with equities rolling over. We'll see how the week finishes out, but so far this is continuing higher. If we look at gold, not really doing a whole lot this week. So far it's still in this short-term pullback, checking back to this 158 breakout zone from last week. Again, trends all still pointing firmly higher here. Be an interesting level right now to see how how this closes out the week as it retests and gets back near this 158 zone. If we go to silver next, silver a little more aggressive of a sell-off here today. You can see on the week it's down 2%. It did try and recover throughout today's session, so it did close near the highs of today's session, but certainly losing this $14 level, perhaps starting to break these accelerated trend lines and losing some of the prior day support. So silver here looks to be in a vulnerable situation. Needs to really get some confirmation and back over 14, 15 or so. So we'll see if that happens into the end of the week. But for now, I'd be a little cautious here in SLV. Now, the main kind of front and center story here is USO. And this is something where it's very important to understand, especially in these commodity ETFs, what you own. And the USO is kind of front and center at perhaps being on the hook or exaggerating, or certainly being in a very sticky situation here, where we saw basically the May futures oil contract, WTI oil contract, close negative yesterday, which is something that we've never seen before. And that is, occurring basically at rollover date, because the May contract is rolling out and we're now, setting our sights on the June contract for oil. The point here, though, is if you're trading the USO ETF, just know that you are quite removed, right? Your derivative of derivatives away from the underlying commodity that you are hoping to get exposure from. And the troublesome sign here is the USO had multiple halts, and I'm not super on top of the news and the latest developments on USO of what some of those halts were, but I know they are changing. They seem to be going in and sort of discretionarily changing the allocation to the expiration that makes up this USO ETF. And basically, what that just tells me is you have to be extremely careful here in this product, because it is a product. You're not actually getting, you're not taking delivery here. You're just trading this synthetic product, and you have to be careful in times of stress and market anomalies like we're seeing. This could go to zero as well, right? Not saying there's even a high probability of it happening. It's probably a low percentage probability that it happens, but it is conceivable, certainly, to see something like this even blow up. So you have to be careful. This is not even a leveraged product, and there are leveraged ETNs and ETFs out there, and those are just a stick of dynamite at this point. So just be cautious. And it's again sort of reminds me here that USO, unfortunately, I don't think there's an active way to get spot index or spot futures contracts in TC2000. At least I haven't found the symbol mapping for it. If there is, and somebody knows of it, go ahead and leave a comment. I'd appreciate it. But the best we have as a proxy for oil is this USO fund here, which we know has its issues in tracking, but nonetheless, oil is in a tough spot right now, and maybe not as exaggerated as this if you're charting the futures contract, but again, it's the pressure, the demand dry up here, and obviously all the supply issues between OPEC and Russia and everything else that's going on is just keeping this commodity in a very very difficult spot. So if you're looking for that exposure, I would again highly suggest looking at futures contract, getting the exposure that way, and being much less reliant here on the ETF products. So with that said, let's go to natural gas here. And I mean, the one other thing I'll say with USO is it doesn't seem to be spilling over, even though this is a market structure interesting story of what's going on right now. It's not necessarily spilling too much into, at least right now, a lot of even the energy names. They're still well off of the lows. It still looks contained. Again, if you go back out in the futures curve and you look at, oil contracts 6 months from now, you still have healthy 20 plus bids going on there. So be careful on those headlines. Etc. So that's oil. Natural gas here is lifting off of the lows. Again, I think getting some good life off of it, some volume coming in. It's off the lows, breaking through a little bit of resistance. Still, in a sideways to downward trend. So there's still really, to get some life here needs to get over $15. But I think natural gas is, starting to put something together here. If you're short term and if you're active, take a look at it. So that's it. That is the midweek recap. Let's take one more check here at Netflix, so you can see losing a little bit of ground, basically now back within today's trading range. I think we also had Chipotle after the bell. Looks like this is higher. So far, looks like some neutral to positive earnings announcements out of some of these bigger companies. We'll see how those fare heading into the session tomorrow morning. So thanks as always for tuning in and watching. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great rest of your day. We'll see you back here tomorrow for some swing trade ideas during the market session.